The biggest event that will have everybody's attention today is RBI policy meets outcome. Poonam is standing by with what the street is expecting from RBI's credit policy today.
Well, if you look at the bond markets, they're already pricing in rate hike. The bond yields are already up nearly around 10 odd bips in the last 7 to 10 days itself. And although it is slightly on account of tight liquidity conditions as well, but also hawkish RBI minutes. But the poll is suggesting that nearly around 75% of the respondents still do expect a status quo from RBI. However, the commentary is still likely to turn pretty much hawkish. To recall, in the last MPC minutes, nearly 2 members are likely to probably vote for a rate hike during the current meeting. However, the expectations for FY19 is the fact that only BOFA is expecting probably a rate cut by RBI, although data dependent and monsoon dependent. Also, we're seeing that nearly around 75% or over 75% are at least expecting a rate hike of nearly around 25 to 50 bips in FY19. We may also see that RBI may go ahead and hike the CPI forecast, but they may still retain the GDP forecast. The commentary in terms of the overall liquidity situation, commitment to the use of OMOs would be fairly important, and probably that is the key that may move the bond markets either ways. However, the key rationale for a status quo would be the fact that the growth is itself at a pretty much a nascent stage and probably needs to be supported, and the fact that FY19 growth is still likely to moderate in the second half. Also, the fact that global central banks are turning slightly cautious and global growth is slightly weakening in some of the pockets. But the rationale for a rate hike would be probably very simple, that the oil prices are definitely impacting the overall macros, the need to prioritize financial stability, and the fact that oil prices, high MSPs, as well as the fact that core CPI inflation remains fairly sticky. Besides that, however, watch out for the RBI's commentary in terms of the outlook in terms of the banking system, stressed asset resolution, and overall view in terms of the dollar liquidity. But as of now, the poll is suggesting a status quo.
Thanks, Poonam, for that. The RBI's Monetary Policy Committee has indeed to walk a tightrope. On one hand, it has to tackle inflationary woes, and on the other hand, it's also expected to support growth. But does the MPC have room to hold fire till August? Let's go across to Neha Bothra for a quick snapshot of the stance of the MPC members in the recent times to get a better idea of what to expect.
Indeed, a very tough spot for the MPC to be at this point. Inflationary woes to tackle on one hand and growth to support on the other hand. So indeed, the MPC does have a tightrope to walk at this point. In fact, do remember, as far as the 6 members are concerned, Urjit Patel has time and again stressed on inflationary woes, suggesting that incoming data is something that they will have to monitor very closely in the coming days. In fact, we stand in a very different place compared to Feb, because remember, at that time oil prices were not as much of a trouble as they are now. We are looking at $80 per barrel oil prices, and that really is creating pressure on prices and stoking inflationary trends, much to the concern of the RBI. As far as the other member is concerned, Viral Acharya, who is also part of the MPC panel, he has categorically indicated that this could be a time to shift to removing excess accommodation in the system, and the withdrawal of accommodation indicated very strongly to a possible rate hike or even a change in the stance as far as the policy is concerned. So yes, he also is pretty concerned about the rising inflationary pressure in the economy. But the most hawkish of all is Michael Patra, who has in fact even suggested a rate hike in the February policy. He voted for a 25 basis point rate hike. He was the lone dissenter. All other 5 members had voted for a status quo policy outcome. As far as the other members are concerned, Ravindra Dholakia is more dovish of the lot. In fact, in the past, on several occasions, he has suggested a rate cut of as much as 25 basis points. He does feel that the RBI has room to absorb much of the inflationary shock and feels that this is the time when the RBI needs to support the growth in the economy. As far as Chetan Ghate is concerned, he also feels that the turnaround in economic growth prospects is around the corner, and the RBI should do its best to support the growth engine going forward. Pami Dua, of course, feels that she sees upside risk as far as inflation is concerned, and also feels that there are lackluster growth prospects going forward. This is what she stated in the February policy meeting. So overall, as you can see, let me start with the most hawkish, who is Michael Patra, who last time suggested a 25 basis point rate hike. So indeed, this policy meet as well, he would perhaps want to influence the RBI with a possible rate hike situation, which probably would be best suited for the economy at this point. He could be seconded by Viral Acharya also, who very categorically indicated that this could be a time to tighten the monetary policy situation. Urjit Patel has also stressed the need to watch incoming data, and of the other members, we do know that Ravindra Dholakia opted for a rate cut in October policy as well. So clearly, it seems to be pretty divided. Status quo is what the policy poll indicates at this point.
Thanks much, Neha, for bringing us that detailed glimpse of what the stance is of the various members.